Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 5th of March and Wednesday, and it was a very good day for the markets. And we had been kind of expecting this move. I had spoken yesterday about the same thing in my video as well. That is the market forming a bottom, and are we going to actually make a up move? And that is what has happened exactly today. I'm very happy that there has been some respite, because I think the signs of this was visible from last 2 3 days, when we used to gap down and then we used to go up, when the world markets were actually negative but we did not fall. We of course would gap down when Dow is down to 2.5%, but then from there we would recover. So those were the signs, small signs, that we have to pick up, that the market is getting ready for a some sort of a relief rally. And then the last thing that came yesterday, which was kind of a confirmation, which I had spoken about also, was the change in open interest. So open interest has been going up by almost zero point 0.1 every day. So on Friday 0.6, on Monday 0.7, yesterday it was zero point 0.8 to zero point 0.8.5, and today it actually crossed 1.1. So there has been a clear indication that slowly people were building up long positions for this particular expiry, which actually culminated today with this strong up move. Now, the way markets was actually falling 8, 9, 10 days of non-stop fall, 5 months of non-stop negative close, any positive in the markets is good. And what happens is that these rebounds are very sharp. So if you look at some of the indices like alpha and all, they're already 5% up from their bottom. They might not be 5% up today. They might be, let's say, 2.5, 3% up, but they're already 5-6% up from their bottom that they had made a couple of days back. So that is a kind of sharp recovery that you see in a lot of these indices like momentum, alpha, small cap names. So the whole point is that whenever the market is going down, one needs to continue to invest. And I have been saying this many times, and I'll talk something about this at the end of the video also, that when there is blood on the street, when there's panic on the street, if you have a system in place which tells you that, okay, I'm going to buy this particular index or this particular mutual fund if it falls by this particular level, because this is what the historical data shows me, that 9 out of 10 times it won't fall more than this. And even if it does, it's actually an index or a mutual fund, so it won't go to zero. It's not an individual stock. So that is the beauty of investing via mutual fund or a ETF or a index or basket of stocks, is that you have margin of safety. And when the corrections come, when the valuations actually become good, that is when you pull the trigger. So I've been saying about this for a long time, and I've been asking a lot of people to consider investments in mutual funds as well, which I have already shared my link in the description, and a lot of people have contacted me, and I've been very happy to say that I've been able to help a lot of people structure their portfolios in a good way, and a lot of them actually did the investments also at the right time when the market is falling down. So it's actually good. It's good. And if anyone is keen and interested in getting their mutual fund portfolio made, they can contact me through the description in the form in the description below, and I would get in touch with them, and then we'll have a discussion on that. But the whole point is not ever to waste such opportunities, because when the markets correct and when they actually go up after that correction, it's very difficult to catch it. It's very almost impossible to catch it. And I have said that when markets actually correct, they correct 800,000 points in one shot. By one shot I mean 5-7 days the correction will be done. And sorry, I think the light is gone. And then what happens is that immediately after that it's also going to shoot 800,000 points. So you will not get a chance actually to get in or get out of the market so easily. So it is best to keep a fixed system in place which allows you to ensure that your investments are going through at regular periods of time. So that's it in terms of the investment part. Now let's see how the markets have behaved. Sorry for this interruption that happened in between. Now this is how the 3-minute chart for Nifty is. We opened over here at 9:15 and we immediately went up. So there was a huge candle right at the start, and it was very visible that today is going to be a real up day. And from there we really haven't looked back. From here it was looking like it's just going to break out, but then you don't get so sharp pullbacks also, because over here also it was almost 1.5%. It's not suddenly that you have been going down 1% every day and then the next day you will be 3% up. So it doesn't happen like that. But I think whatever we have got today is also good. It's a good enough number that I would take any day. Now this is how the daily chart looks like. Now if you can see over here, this the green candle has got made. We really did not test this particular support, which was about 21,700. We have bounced slightly above that, and now the next resistance is going to come in about, so we have reached almost 22,400. So about 22,700, 750 odd will be the resistance, and then this particular line, if we extend it, so somewhere over here we'll have to see whether we are able to cross 23,000 or not. If we are able to cross, then this lower lows, lower high pattern kind of will get challenged at some point in time. Eventually it will get challenged at 23,800, but that is still some time away. But no one would mind, the Nifty actually going up above 23,000 also in this particular pullback. And then from there, we don't know whether it's going to be just in a range or come down or whatever. That is too far-fetched right now to talk about. Now coming to the open interest, as I was saying, that the open interest has been going up. And if you see over here, Nifty PCR is at 1.07 now. Okay, and it was 0.8 yesterday, 0.7, 0.6 day before, and day before that. So it has been steadily moving up, and tomorrow is the expiry. So expiry looks all right as of now. How much premium we have? We don't have too much left, but we still have about 150 odd points premium left, so which should be okay. But if it opens at about 120, 110, then there's not too much premium left to play around with. Now this is how the individual indices behaved. Metals is up by 4%, public sector enterprise by 3%, media 3%. So all the sectors which were beaten down tremendously have risen up sharply. Autos, small cap, all these were down hugely, and they are, as you can see, they are going up. So which is a good sign. Mid cap is up 2.5%. So all these indices are up, while the defensives like financial services, banks, which are not falling, have not gone up that much. Nifty, I think, is going to end at 1% plus, which is going to be great for the day. Now let us look at the heat maps, how the heat maps have performed. This is a Nifty heat map. So you had good gains coming in Bharti 2.8, SBI 2, HCL Tech 2.4. ITC 1.7, Nestle 2.3, JSW 2.7, NTPC plus 3.9, Power Grid 4, M&M plus 4.4, so Tata Motors 3.5, and so on. Adani Enterprise 5% up. Bajaj Finance was the only one which was down. Coming to Nifty next, again huge gains in REC, Geo Finance up 5%, PFC 3.3. So all the names which are getting beaten down are the ones who are rising up very fast. HAL 3.4, IOC 3.5, VEDL 5.5%, and so on. Coming to the broader markets over here, it's even better. So you can see that there are names which have gone up by almost 5-7% in this particular rise. So let's look at let's take a sector which probably was down. So let's take this. This is your process industries sector. So you have all the names going up, like HSCL 6%, AWL 8%, fluorochemicals 4%, Coromandel 5.5%, Chambal Fertilizer 6%. So this is the kind of run up that has happened in the broader markets. So when the main indices, the stocks are going up 3-4%, then in the broader indices you will have stocks which are going up 7-8%. So there's no surprise over there. Now, yeah, how are the international cues stacked up? The international cues look all right. One important international cue that I would like to take your attention on is the US dollar index. US dollar index, as you can see, is broken down below 105, which is excellent news for us. So whenever the dollar index goes down, that basically means that the dollar is weakening against a basket of currencies, and that usually leads to some sort of an inflow in the emerging market space. So which will be good for us. So I will take you through the dollar index chart. If you look at this, the dollar index was at 100 somewhere in September end. That is when our markets also peaked out. So at 100 it is a good sign for emerging markets, and from there it went up to all the way to 110, and this is where the problem started. This 10% up in dollar index created a lot of outflows from the emerging markets because dollar was getting strengthened, and from there it has steadily fallen. Now it's at 104.85, so which is going to be good news for us. Apart from that, the Nasdaq futures are up, which is good news for us because Nasdaq US markets were under pressure yesterday, though they recovered by the end. But futures being up is a good sign. So that basically means that our markets probably can also continue their upward momentum. The USD INR is because dollar index is also weakening, so USD INR is also at 87. It looks like it's going to go below 87, which is going to be good for us. Gold and silver are holding out, so there's no problem over there. Another chart that I would like you to look at is Brent oil. Now, I had told you that Brent had gone from 69 odd level in September, okay, all the way to almost 80, right? And then it came down and then again 80. Now it is back to 69.70 levels, which is great news for us. So this is also another positive. So all the positives are kind of aligning for us, which is great. And that leaves me to the index chart of from 52-week high. How much have the indices fallen? So Nifty is still at 15%, even though it has recovered 1.5% today. And the other indices like small cap is from 25%, it is now to 22.9%. So just one day there is a smart recovery, and Nifty next from 26% has come down to 23%. So you are seeing how quickly these indices also recover on their way back. Momentum was down 32%, it's 29% now. Alpha was down 35%, it's 30% now. So as I was saying, they've already recovered 5% from the bottom, and the recovery in the main indices is not even started. So that was a roundup about the markets today and how everything fared. So it's been a fantastic day for everyone's portfolio will be smiling. And as I had told you before, when the markets are correcting, it's a good time to at least deploy some cash if you understand where you want to deploy, because don't waste these opportunities. These opportunities don't come every day. I was reading this is some 10th or some 10th 11th correction which is more than 15%. So more than 15% corrections on mainline indices don't come so often now these days, and perhaps this was the worst correction after COVID also. So I'm saying that whenever you see indexes down 25, 30, 35%, ask yourself this question: if you are there as a long-term investor, is this a good time to invest? Because of course when the markets are going down, there is always a fear that they will go down further. But then at some point in time, if you have a system which says that yes, this is a good time for me to invest, whatever be that metrics, P, price to book, earnings, whatever you benchmark it against. A lot of people benchmark against ratios as well, that small cap to large cap ratio, and whatever your parameter is. If you think that there is value in the markets, if you think this is not a bad time to invest, then you should deploy some amount of money, because when the bull markets come, and I'm not for a moment saying that the correction can't be deeper than this. Of course it can be, no one knows. But whenever the bull market come, you should not be in regret that, oh, I missed that bear market. Because every correction in the present looks very tough, but in hindsight it looks like a buying opportunity. So that's what I keep on telling my clients as well, that don't waste a bear market, and deploy sensibly. So yeah, so that's it from me now. Good day, very good day. Yeah, in terms of options, it was good again. As I have said that one side movement is actually good for option sellers. So the calls got taken out within like a few seconds. There was not much to do over there. One by one, all the calls were blowing away. So I took some counter. So I had a lot of puts as well. But I took additional puts, seeing that the market is shooting up. So it's good time to load up on puts, and that helped. And it's going to be a green closing today, so which is good. So some losses of yesterday are recouped, and hopefully March should, as I've said, I believe that March should be very good for option sellers. So let's see how it goes. Yes, one more important thing: NSE changed its expiry day from Thursday to Monday, from April the 3rd. No comments, except that it's just kind of upsets a lot of backtesting data, etc., because now we'll have to contend with the expiry immediately after the weekend. So now Friday becomes an important day, and we'll have to see how the option behavior changes, because earlier we had 4 days of trading before the expiry. Now we will have none. We'll just be going into the expiry, which is unknown territory, immediately after the weekend. So it'll settle down, but it's going to take time. And then what if BSE changes their expiry date? Will NSE again change? So it's like it's been going on for a long time, and too many changes are happening. But anyways, our job as traders is to adapt to these changes and refine our system so that we can make money in the markets, and that's what our profession is, right? So that's it from me now. If anyone is interested, please fill up the form for mutual fund, and I shall get back to you. And I shall see you tomorrow. Tomorrow is an important day. Tomorrow is expiry. So not too much premium is left, but the markets have stabilized, which is a good sign. So let's see how the expiry goes tomorrow, and I shall update you with the expiry video tomorrow. So that's it from me now. If you like my channel, please do subscribe to it. Please share it with your friends, and I shall see you soon. Bye bye.